The Federal Reserve confirmed that they are not raising rates anymore and have indicated that 3 rate cuts are coming in 2024. Now, this is generally very bullish for equities, and crypto has reacted accordingly here, seeing a nice move on the day and effectively erasing majority of the losses that it did see earlier in the week. You pair that up with the Bitcoin halving coming in next April, and crypto is set up for a very bullish 2024 in my opinion. Now, in today's video, we are going to talk about 3 specific altcoins I believe are set to outperform the broader crypto markets based on some upcoming narratives. You can expect to hear about all this and more in today's episode of the Everything Crypto Show. Before we hop into today's content, just a friendly reminder that I am not a financial advisor. I am simply here for your crypto news and entertainment purposes. And if you do find these videos informative or entertaining, please consider hitting that sub and like button, and I do appreciate all of the support on the channel. So with that, we're going to hop right into the news. And the more immediate news that we saw yesterday is that the Federal Reserve has decided to hold rates steady. And the more important piece of news, in my opinion, is that they are looking for 3 cuts in 2024. With the inflation rate easing and the economy holding in, policymakers voted unanimously to keep the benchmark overnight borrowing rate in a targeted range between 5.25 and 5.5%. And along with this decision to stay on hold, the committee members penciled in at least 3 rate cuts in 2024, assuming in quarter percentage point increments. That's less than the market pricing of 4, but more aggressive than what officials had previously indicated. And we can see here, right, like since the beginning of 2022, they have gone on this very aggressive rate hike cycle that really, we haven't seen it go up this fast in a while, but we actually haven't seen rates this high since 2007, since 2006 and 2007, before they started to come back down here late 2007 and going into 2008. And that shows you the Fed was really trying to squeeze as much liquidity out of the market as they could, slow down inflation, and it appears that they do think they have been successful in this for the most part, as they are now holding rates and looking to make these cuts in 2024. And we know that the market is forward looking. So just based on the fact that the market is now expecting these rate cuts to come, we've actually seen some very bullish moves across a lot of different markets. The Dow Jones actually hit a new all-time high today. The S&P and the Nasdaq are within a couple of percentage points of passing their all-time highs, and we saw crypto also make a nice move to the upside. Now, Bitcoin here is actually still a decent chunk below its 2021 all-time high at about 69,000. Currently sits at 42K. So that's still about like 30% off its previous all-time high. Ether is still over 50% off its previous all-time high. And I do believe that crypto is set for once again a year of outperformance when compared to majority of other asset classes, actually all asset classes. That is why I am a crypto maxi, because I simply believe this is where the best gains are going to be over the next couple of years. And 2023 definitely has kind of proven that point correct so far, right? We can see here that year-to-date Bitcoin is up 158%. I think the Nasdaq is the best performing index in the US, and that's up about 50%. So some very nice outperformance here, and this comes even before the Bitcoin halving has occurred, which currently is set for April 17th of 2024. So I do expect this to, basically have the actual supply for Bitcoin, while we do also expect the demand to increase based on the BlackRock ETF and more institutional adoption. And all in all, looking forward to a 2024 in which I do think that the price action will be very bullish. But there are 3 altcoins I do want to talk about now. From kind of like a fundamental perspective, as well as a technical perspective as well, that I do think are actually set to make some very nice moves in this new year. And the first one here is Polygon. Okay, so we've seen a lot of these altcoins go crazy, right? Like Solana's up over 600%. Avalanche here, this is one we've been talking about quite a bit, at that $10 to $12 zone, now sitting at $38, up 254% on the year. And Matic has been a huge laggard here, up only 16, basically up 17% year to date, while some of these coins have seen triple-digit rallies, even including Bitcoin. I think a very strong narrative for Polygon in the new year is Polygon 2.0, which basically will see various protocols make up its ecosystem become increasingly interconnected through the use of zero-knowledge proofs. So basically, what they are looking to do is amalgamate Polygon's various Ethereum Layer 2 scaling networks to complete their Polygon 2.0 cross-chain coordination protocol, effectively looking to build out all of these different networks and have them connected and basically share the liquidity, making Polygon 2.0, they like to describe it as a continuous unbounded block space. So the scaling technology firm unveiled Polygon 2.0 in June 2023. Outlining the plans for scaling the ecosystem, comprising 4 different protocol layers. And so far, they're basically just kind of going through the process of implementing these new protocol layers. They are also migrating the Matic token as we know it at the moment into the POL token, which will be the new token for Polygon 2.0. And I do think the Polygon 2.0 is set to be a pretty strong narrative leading into the new year. So you can actually see here, they're kind of referring to it as the value layer of the internet. And basically, we also know that earlier this year, they launched their very own Polygon ZK EVM, which is effectively their own true layer 2 solution for Ethereum. So we can see here, introducing Polygon 2.0, Polygon POS to zero knowledge L2s, protocol architecture, as well as the new POL tokenomics. Now, this is one thing that I've outspokenly been not super happy about, is the fact that the new POL token actually is not going to have a max supply. So you can see here on CoinMarketCap that there's no max supply indicated for POL, and that's because they are actually going to be inflating this token by 2% per year, while the Matic token actually does have a max supply of 10 billion. So I'm not a big fan of them kind of lifting the hard cap and introducing inflationary tokenomics. But if the demand can outweigh the 2% inflation, that should still work out in the favor of the bulls in 2024. Now, Polygon is actually not the only chain getting its own 2.0 upgrade. As you can see here, Avalanche 2.0 is also in the works. We actually spoke about this when the coin was at that $10 range, saying that I believe this would be a big catalyst to actually move AVAX to the upside. And honestly, I don't know if that's the reason why Avalanche has made such a big move here since that video. I mean, not the video itself. I don't have enough views for that, but just the narrative of Avalanche 2.0 kind of being the move. And obviously, I mean, no one will ever know if that is the case. Markets are always right, regardless of what you think. However, we can just kind of see here that it's had a pretty good rally, right? Up over 140% in the past 30 days. And Avalanche 2.0 definitely can be a contributor to that. They're talking about a lot of things like making it easier for people to access subnets, having all these subnets be interoperable, and just increasing the overall efficiency of the blockchain. And it appears that the blockchain, even in its current state, has definitely caught the eyes of some very big institutions, including both JP Morgan and Citibank. I kind of think this is probably the big reason that Avalanche has seen such a big move to the upside here, as we actually did see that the AVAX rally came on the backdrop of strong developments within their ecosystem. So Onyx by JP Morgan and Apollo Global announced a collaborative venture under Project Guardian, basically leveraging the expertise of Layer 0 to connect Onyx with a permissioned Avalanche Evergreen subnet. And Avalanche Evergreen subnets are basically targeted at institutions, allowing them to do forex trades, portfolio management, and so we actually did see JP Morgan kind of leveraging the Avalanche Evergreen subnet, enabling seamless subscriptions and redemptions for funds offered by Wisdom Tree Prime. And we know that Citigroup actually used their very own, they selected Avalanche's Ava Cloud here for Project Guardian as well. And basically this choice was made to construct an innovative application leveraging blockchain infrastructure for pricing and executing a bilateral spot forex trades. So they actually traded the Singapore dollar versus the US dollar using the Avalanche chain through an Evergreen subnet. And yeah, that's a very big deal here, especially considering, I mean, I think it's funny that we saw Jamie Dimon basically bashing crypto, the CEO of JP Morgan, basically bashing it last week. And this is a perfect example of watching what people do, not what they say, because behind the scenes, these institutions are very bullish on crypto and on blockchain technology. And it seems like Avalanche is poised to be a big beneficiary of that. Now, the final token I do want to talk about to wrap things up, this is Render. Render has had a very impressive year. I believe it's up like over 700% on the year. And this token plays into a huge narrative in the markets right now. I would argue probably the narrative that saved the markets going into 2023. And that was the launch of ChatGPT and the AI narrative that basically just took the market by storm, okay? So Render here is up 951% on the year, sitting at $4.24. And here's what Render is, okay? So Render is distributed GPU rendering on the blockchain. That's the Render network itself, which provides near unlimited decentralized GPU computing power for next-gen 3D content creation. So they are touting themselves as the first decentralized GPU rendering platform, empowering artists to scale GPU rendering work on demand to high-performance GPU nodes around the world. So through a blockchain marketplace for idle GPU compute, the network provides artists the ability to scale next-generation rendering work at fractions of the cost and at orders of magnitude increases in speed when compared to the centralized GPU cloud. And they kind of talk here about some of their actual basically their benefits over other GPUs, and they basically talk about network scalability, efficient infrastructure, a better use of GPU power, and digital rights management. So how does it work? The Render network, basically, the use cases here include media, industry, augmented reality, mixed reality, gaming, medical, and VR, all of which obviously do kind of play into that AI narrative, which I do think is going to continue. The AI narrative has only been around for a year. These narratives here, they can stick around for a very long time, especially with something like the potential that AI has. The metaverse, not so much. I think people kind of saw right through that, and people also saw Facebook tank like 70% when they tried to adopt that narrative. But AI is definitely one that people are looking at to not only to also increase human efficiency, right? To actually kind of have people be more efficient with this AI technology. So definitely something I do think, a narrative rather, that is here to stay, and something that is bullish for all tokens regardless of kind of like market conditions, is a burning mechanism. So we can actually see here Render, I believe, has a supply of 536.8 mil, okay, which is really not that bad. I mean, it's not even in the billions, and it's at a circulating supply of about 69.27%. So there's still about 30% of the supply left to be unlocked. But earlier this year, we actually saw Render Network token. Basically, we saw a community vote pass for a new burn and mint model. So let me actually go ahead and find this. Okay, so according to the proposal posted on GitHub, the new model would allow artists to burn the required amount of Render in exchange for non-fungible work credits, which are distributed to node operators. With the BME model, Render aims to make Render a commodity and a deflationary asset, and that's the most important thing right there. Once again, just simple like supply and demand, even in terms of the Bitcoin halving, the Render network use cases go up, the token supply goes down through these burns, and hypothetically speaking, that would actually drive up demand for the remaining tokens. And the demand so far this year has been hot, right? If we even take a look on a year-to-date basis, I mean, this thing has basically just been smashing through year-to-date highs basically all year, right? And the real rally started back in September at about $1.24. I mean, it was at 60 cents here at the beginning of the year, so we can just say it's been rallying all year, right? It pulls back as crypto typically does, but if you ignore the volatility, you have an altcoin that is up over 900% on the last year. So definitely very nice if you have been a holder father of Render. Congratulations to you. And we can also see here, zooming out, that Render has broken above some very key areas dating back to 2021 and 2022 when everything basically was crashing. So I do believe this is a project that is set to continue benefiting from the ongoing AI narrative. And on that note, I hope you did enjoy the content in today's video. I hope you are all staying happy, safe, and healthy, and I hope to catch you in the next one. Peace out for now.